Real Money's Doug Kass is here with his 15 surprises for 2014. We're going to run through numbers 1 through 5 right now. Welcome, Doug, and here's surprise number 1. Slowing global economic growth and fears of stagflation emerge. So tell me about it, and what do you do?
At the core of this year's surprise list, Greg, is that the U.S. economy disappoints, with domestic real GDP growing at 1.7% or less, which is half the expected rate relative to the consensus expectations. And global growth also slows, with growth of, say, 2.5% versus consensus forecasts of 3.6 or 7% plus.
And that slowdown is not going to help corporate profits. Your surprise number 2 is that corporate profits are going to disappoint. So tell me about that and how you're going to play it.
Yes, it looks like S&P profits will be about $108 a share in 2013. My expectation is for only about $112 a share this year, which is $7 or $8 less than the consensus. I'm worried about a contraction in corporate profit margins, in the reduced influence or benefit from aggressive monetary policy, and lower buybacks because of higher interest rates. I would buy index puts, I would sell index calls, and I would even purchase inverse ETFs.
Which sets us up nicely for surprise number 3. Stock prices and PE multiples decline. Any idea by how much?
My view is that stocks will probably decline on the order of 5 to 15%. The big surprise last year, Greg, was that while earnings were only up 5%, stocks were up 30%. That's because price-earnings ratios grew by 25%. Since 1990, the average annual increase in PE ratios is only about 1.5 or 2%. So that was a big surprise. My surprise this year is that valuations declined by about 15%. In this case, again, I would buy index puts, sell index calls, or purchase inverse ETFs.
And according to your surprise number 4, you also want to buy bonds because you say that bonds are going to outperform stocks. Tell me why.
Well, against the backdrop of a decline of between 5 and 15% for the U.S. stock market, it's my view that the return on long-dated U.S. bonds, taxable bonds, will be close to 10%. I expect that the yield on the 10-year, which most people expect to rise from 3% to 4%, will decline and be in a range of between 2.5% and 3% in 2014.
And then finally, your surprise number 5, you list a number of major individual stock and sector surprises. The one I found most interesting was that you think Apple is going to go down and you want to short Apple calls. Why don't you tell me why?
Sure. Well, my proudest call with regard to individual stocks last year was my stock surprise of the year, Altisource Management, which rose by an amazing 1,200%. This year, I expect Apple shares to drop $1 a share, never reaching $600. Remember, the price target by most sell-siders is between $650 and $700 a share this year. I think it's going to spend most of the year under $525 a share because profit estimates are again going to be shaved. It's interesting to note that today, when the Dow Jones Industrials average is up 100 points or so, Apple shares are down $4 or $5.
All right, thanks a lot, Doug Kass, for those predictions.